Well, good evening, grade 12 learners, and welcome to another session. In fact, it's your last session of telematics for this year. And I'm hoping it's your last session of telematics ever, because I'm really hoping that you would pass the year and go on for to do further studies. Well, my name is Mandy Moyse, and you wouldn't have seen me this year, but I am an accounting teacher, and I'm here today to teach you manufacturing costs in the manufacturing environment. I'm really so grateful that there's a few schools that have signed in. I see Scottsdene High School is here. Welcome, Scottsdene, and Rosendal is here, and Sinajongo High School. So I'm really encouraged that you would stay on a Friday afternoon to listen to extra accounting so that you can improve your Matric accounting. So really well done on staying, and please congratulate or wish your teachers well, and just for to them for encouraging you to do extra work. Really commend them for that. So we're going to start today just with a bit of background on manufacturing. I know that you would have learned this in grade 10 and 11 already, but just to get everyone on the same page, I just want to go through a few terms and terminology. So we're just going to turn our eye to the screen. We're going to turn our eye to the screen, and we're going to go over a PowerPoint that I've prepared for you, and the PowerPoint is on manufacturing costs. So we're just going to go through the theory of it. So let's just look. Sorry, let me just do that. Okay, so there are certain costs in the manufacturing environment, and the one is material cost. So your material cost is a new cost in the manufacturing environment. It's something that you would not have seen in a trading undertaking. Materials, I'll go through what materials are later on. And then there's labor costs, because they are busy making something from scratch. So there's labor costs involved. And then there's factory overhead costs. And today we're just going to focus on those three costs, because we're going to do the production cost statement. And those are the three costs that go into your production cost statement. So there's material costs, labor costs, and factory overhead costs. Those are the three costs in the manufacturing environment. Then let's break up material costs into direct and indirect materials. So we can further break down your material cost into direct material cost and indirect material costs. So let's see what those are. Your direct material costs, those are your raw materials used to manufacture the product. So if, let's say, in the case of the example we're going to use later on, it's going to be Glen table manufacturers, and Glen will have to buy wood because he's making tables. He would probably have to buy nails because that's the table. So that will be, his wood will be the direct material costs. Why is it direct material cost? Because it forms a significant part of the product. And then there's the indirect material costs. And these are any other materials needed to manufacture the product, but cannot be identified directly to specific items. In other words, the nails you might not be able to quantify how many nails he uses in each table. The varnish he uses to varnish his tables with, you won't be able to quantify. So really, direct materials, you will say, are the quantifiable. In other words, you can put a direct price to that. And your indirect, it is very difficult to quantify, to say you use so many nails or you use so much varnish. So that is when you use indirect materials. Okay. Then labor costs. Again, there's direct labor and there's indirect labor. So the direct labor is what I call your touch labor. These are the people who make the product. They are directly involved in making the product. And I like to call that the touch labor, because they are directly involved in touching the product. Then you get your indirect labor. These are the employees not directly involved, but they are on the factory floor. They are there, and that's your supervisor, your cleaner. So those are the people, they are part of the factory floor, but they are not directly involved. They don't touch the product. So that is how you can distinguish between direct labor and indirect. The direct people make the product, and the indirect labor, they are involved in the process, but they just keep the factory floor clean, or they're the supervisors who supervise the process. Okay, so we've gone through materials, we've gone through labor. We said that there's indirect materials and direct materials, and we said there's indirect labor and direct labor. So this is all terminology that you have to know before you can do the question. Then we have factory overheads or factory overhead costs. And what are these? These are costs that cannot be directly linked to the manufacturing of the item. Okay, and what we do here is we put all our indirect costs. So we'll say all our indirect items will go in there. So there you have indirect costs and factory related expenses. Okay, so we're going to put all our indirect labor in here, and we're going to put our indirect materials in here, and we're going to put any factory related expense we're going to put in here under factory overhead costs. So this is your indirect materials, indirect labor, depreciation on factory equipment and factory water and electricity, and maintenance to factory equipment, etc. That is all your factory overhead costs. So if you look at it, there's only really 3 types of costs in a manufacturing environment. There's only 3 costs, okay? There's your material costs, which is divided into direct and indirect. There's your labor costs, which are divided into direct and indirect, and then there's your factory overhead costs. But let's just narrow that down. Let's narrow that down. You have your direct materials plus your direct labor plus your factory overhead costs. And remember, I say to you that in your factory overhead costs, you will have your indirect labor and your indirect materials. Okay, so just remember that, because it's very important when we do the production cost statement. Let's just go to a further example on the overhead. Okay, so they are classified as direct costs, which are called prime costs, factory overhead costs. So you'll find that in your direct costs, which are called prime costs, you have your direct labor and your direct materials, and then your factory overhead costs. So if you think about your factory, there you have your direct costs and your factory overhead costs, direct material, direct labor, indirect material, indirect labor, and any other factory related expense. So that really makes up all the costs that go into your production cost statement, and grade 12, the production cost statement is very, very important. So let's turn our attention to activity 6, and that you're going to find on page 13 of your book, your telematics book. That is on page 13, and we're going to do the example. I'm going to work through the example with you, and I'm going to point out those terms and terminology that I just explained. So let's turn our attention to activity 6 on page 13. Right, so here I have, just straighten my page quickly. There we go. I hope you can see this. So it says, Glenn's Tables manufacturers produce wooden dining room tables. Okay, so now we know what they do. They manufacture wooden dining room tables. They want us to do all sorts of things. So the first instruction is refer to number H, and we're going to go to number H now to calculate the direct labor cost. And remember, I said to you, those are the guys, that's our touch labor. In other words, they touch the item. Okay, for the month. So we are busy with a particular month. It's also very important to know if you're busy with a month, if you're busy with a year, because you have to consider that in your calculation. So let's go to number H, and that is found on page 14. Let's go to number H. That's found on page 14. There we go. H, it's direct labor and production. Okay, so now we're going to read the 15 factory workers. Okay, so now we know that there are 15 people working in this factory, and they make the tables, and they work for 9 hours a day, and they each earn 36 Rand per hour. It's important. What I often find is people don't read these questions properly, so they make mistakes. So now we've got 15 people working 9 hours a day and each earning 36 Rand per hour. They were normally, so now we need to know for how many days they worked. Okay, we know 15, 9 hours per day, 36 Rand. So we can work out what the daily amount is, but we need to know how many days was in this month because we want to work it out for a whole month. There were normally 20 working hours in the month. However, due to power cuts, the factory could only operate for 14 weekdays. So now we know that there were only 14 weekdays in July. Now they say, so that's all the information we've gathered. In order to make up for lost time, the 15 workers each worked 45 hours overtime on weekends. So for the entire month, it's not 45 hours per week, okay? It was over the weekends. So for however many weekends there were in July, it's a total of 45 hours. So you have to read properly. The 15 workers worked 45 hours in total. At which rate? Because now we need to know the rate they are working. That is 36 Rand per hour. But what was the overtime rate? The overtime rate is double the normal time rate. So if the normal time rate is 36 Rand, then the overtime rate is 36 times 2 or 36 plus 36. So let's calculate the first question, which is 6.1. 6.1. Let's calculate that using the information that was given. I know that there's a question. It says, what are indirect material costs? I will talk about that now. And what is the difference between the manufacturer or the producer? Okay, before we go to 6.1, let's just talk about what the indirect materials are. So, in the case of the tables, right? He makes a wooden table. So if you just imagine a wooden table, it has the wooden top and it has the 4 wooden legs. But that would just mean that it's just a raw table. So if he just has that, he needs nails to nail the legs to the top. He needs glue perhaps to fasten the top to the legs, and he needs varnish to finish off. He might need some sandpaper as well. So he's going to buy sandpaper. So he's going to sand down the table. He's going to buy varnish to varnish the table. If he's painting the table. So the glue, the nails, and the varnish, that will be the indirect materials. Why are they called indirect materials? Because you can't quantify how much paint you're going to use for one table. You might use a bit of paint, let's say a liter paint for one table, but for another table of the same size, for some reason, you might use 1.2 liters. So those aren't necessarily quantifiable. One table could take 10 nails, but for some odd reason, another table could take 15 nails. So, and what about the glue? You can't quantify how much glue you're going to be using. So that we put in the indirect bank, okay, in the indirect pot. Then the direct materials are the things that you can measure. It is 1 square meter table or 1 meter by 2 meters table. So that's quantifiable. The 4 legs is so much in height and so much thickness. So that is quantifiable. So that is how you distinguish between what your direct materials are and what your indirect materials are. I'm hoping I answered the question. The other question is, what is the difference between the manufacturer and the producer? It's the same thing. A manufacturer and a producer is the same. They produce, they make. A manufacturer makes and a producer makes. So it's the same thing. It's just in English language, you can either say the producer or you could say the manufacturer. I see someone has already given me an answer and they say it's 13,460. So let's see if I got the right answer. Okay, so I'm going to take, so here we go. I'm going to take 15 employees, there are 15 people working. They each work 9 hours per day and they earn 36 Rand per hour. Okay, so if you look at that, that's 15 people, each working 9 hours a day at 36 Rand per hour. Okay? Then you could then also, so that, let's say that you're working out for the day. How many days did they work? They worked for 14 days. Okay, so let's see. I've got 15 people, each working 9 hours at 36 Rand. That gives me 4,860 Rand per day. Times that by 14 days, I get 68,040 Rand for the month. That's normal time. Okay, so that's my normal time. My overtime, I've got 15 people working 45 hours at 72 Rand per hour. Okay, so 15 people, 45 hours at 72 Rand per hour. How much is that? That's 48,600. So I add the two together and I get 116,640. So that's your answer for 6.1. Okay, that's your answer for 6.1. So don't forget, it's the people, that's your people, your workers. Okay, that's your hours, that's your rate. Okay, so that really gives you one day. And then that's the number of days. And so that gives you your answer. There again is your people, there's your hours, and there's your rate. I just worked it out a bit different. Yeah, it's the same here. If you look at that and you look at that, there's your people, your hours, and your rate. And remember, there isn't days here. That is just the total amount of time they worked. So that there is 6.1. You will always probably be asked these types of questions, and I've seen this occur in many, many exams where they ask you to work out direct labor. And it's that concept of the hours and especially bringing in the overtime. Remember, when you're working overtime, it is more, the rate is higher than your normal time. Normal time is what you would work when you work your normal 9 to 5 or your normal 40 hours per week. That is your normal time. Anything over that will be deemed overtime. And your overtime rate, especially if you're coming in on a weekend, will always be higher than your normal time. So what happens is we talk about time and a third, or we talk about double time. Time and a third will simply be, if it's time and a third, it will be the time, let's say it's 10 Rand per hour, and okay, I can't use 10 Rand, that's a bit of a difficult one. Let's say it's 100 Rand per hour and a third of that is 30 Rand, or 10 Rand and 3 Rand. So it's time and a third of that. Okay, so that is how it's usually phrased in accounting. So can we move on to number 2? Let's move on to number 2. I'm hoping you're still enjoying yourself. And people have gotten the answer and they got it right. Okay, so let's move on to number 2. Let's look at it here. Number 2. Oops, that's the wrong question. That's number 7. My apologies. Number 2. Okay. Prepare the production cost statement. This is your matric work. Production cost statement for the month ended July. Okay. Now they say with a separate note for factory overhead costs. Very important. These two items, very important. Show all other workings in brackets. Okay, so we are going to have to do the production cost statement. Let's do the layout. I want you to go to your answer book. Those of you who've got your answer book, let's do the layout for the production cost statement first. And now you're going to see the terminology that I went through. It's going to start coming up again. There I have my direct material costs. Okay, there I have my direct material costs. Remember, think of the wood of the table. Then I have my direct labor. Okay, now direct materials and direct labor is known as prime costs. Okay, when I add my direct material and my direct labor, I get what we call prime costs. Okay, that's my first cost. Another word for prime is first costs. Then I take my factory overhead costs. So can you see? I really only have 3 costs that I must consider. Direct material, direct labor, factory overhead costs. And in my factory overhead costs, I'll have my indirect material and I'll have my indirect labor. And remember I said the indirect labor is the cleaner and the supervisor and the security on the factory floor. And my factory overhead costs is my indirect materials, indirect labor, and any other factory related cost. Okay, then that gives us total cost of production. That gives us total cost of production. Okay, I see there's people working ahead, which is great. Please work ahead if you know the work. Total cost of production. But at the beginning of the month, I might have had items left over that I did not finish in the last month. So this is my total cost of production for July, for this month. But in June, there could still be unfinished tables that I didn't finish. Maybe the legs are on, but I didn't varnish it or I didn't paint it yet. So that is what we call our work in progress. Okay, and that is from the beginning of the month. So that is as of last month or 1 July, my opening balance for work in progress. Okay, then I must skip a line there, please. Now I'm going to get my work in progress at the end of July. In other words, my unfinished items at the end of July. So I take my items that are produced in July, I add my work in progress from last month. So I bring that into the factory. That is there. It's on the factory floor. And I get a total there. Now I take out the work in progress that I didn't finish in July. And that gives me my cost of production of finished goods. This is the stuff that I finished in July. Okay, this is my production cost statement. I'm hoping my handwriting is making a bit of sense there. But I'm going to first have to work out something very, very important that I need to bring into the production cost statement. And that is my factory overhead costs. Okay, so what I'm going to do now is let's go and look at what the direct material costs are and the direct labor costs. Then we're going to calculate the prime cost. Then we're going to complete this note called the factory overhead cost. We're going to finish this and we're going to bring this total that we're going to find here, we're going to bring into our production cost statement. And then we're going to finish our production cost statement. Okay, so that's what we're going to do today. Please, learners, work ahead if you know the work so that we can mark it at the end. And so that you can ask me some questions and I can answer some questions. So let's look at the fact that we've already calculated. Let me just bring this in here. Let's look at the fact that we've already calculated this amount here. Okay, so this amount here, I just want to use a different color pen. This amount here, we're going to bring into our production cost statement. Why? That is our direct labor. We've already calculated it in 6.1. So that's our direct labor. Okay, so we don't have to recalculate that. So let's put that into our production cost statement because we already have it. There we go. Direct labor, and the amount is 116,640, already calculated as in 6.1. Okay. Exams are also always set that you can work out amounts before. Now we're going to look at our direct materials. Another word for direct materials is raw materials. Okay, so raw materials and direct materials are the same thing. Raw materials there is also known as direct materials. Okay, so at the beginning of July, I had 40,000 rands worth of raw materials in this business. Then, at the end of July, I have 65,000 rands worth of raw materials, and I bought 65,000 rands worth of raw materials. So, this is how I'm going to calculate my raw materials. I'm going to take, okay, if I draw my T account, my raw materials, or my raw material stock, okay, is an asset. So it has a debit balance. So the 40,000 is a debit balance. Then I bought an additional 180,000 rands worth of raw materials that I bought on credit, they say. So that will be creditor's control on that side. And I have a closing balance of 65,000. That is what I did not use. So what I'm trying to calculate is my raw materials issued to production, okay, which is really 40,000 plus 180, that gives me 210, minus 65. So my raw materials issued to production is 155,000, and that goes onto my production cost statement. Another way to write that, if you're not going to draw a T account, you say 40,000 plus 180,000 minus 65,000. So what I started out with plus what I bought minus what I didn't issue to production, and that gives you 155,000. So that is the cost of my raw materials. Don't forget, when you get to materials, whether it's direct materials or indirect materials or work in progress, there's always going to be opening balances. So you must consider your opening balances. So let's put the amount in. 155,000. I'm going to put in there 155. That is my raw materials. Okay, now I'm going to take my direct material costs, which is also known as raw materials. Don't get confused with terminology. Okay, taking my direct material costs, and I'm going to add my direct labor cost, and that gives me 271,640, which is also known as my prime cost. My prime cost, which is really my direct cost. Another word for prime cost is direct cost. Okay, let me just see if there are any other questions. No, there's no other questions. So people are answering. Very well done. For people who are working ahead, I really appreciate that. And so you can just check it against my answer. Okay, so let's go to factory overhead costs. This is a very, very important question because they always seem to ask you to calculate the factory overhead costs. So, what do our factory overhead costs consist of? Always indirect materials, remember I said? Okay, indirect materials and then indirect labor. But we don't write indirect labor here. We write wages and we write salaries. Okay, that is really our indirect labor. Let me just write it here. That there is our indirect labor. Okay, that's our indirect labor component. So remember I said to you, we're going to bring the indirect labor component into factory overhead cost. Then what else can we expect? Okay, we can expect depreciation on factory related items, depreciation on factory machines, depreciation on factory equipment, okay, not on office or on the delivery van, unless the delivery van, there's a portion where the delivery van can also buy items for the factory. In other words, they can deliver materials to the factory. In that case, they can portion a portion of the depreciation for the delivery van to the factory. But that will be very clear. In this exercise, they don't have it, but they could say something like The delivery van also delivers the raw materials to the factory, and 50% of the depreciation must be portioned to the factory. If that instruction is given, then you take the delivery van. If the delivery van only delivers finished goods, then it does not form part of factory-related expenses. Then it will be sales and distribution. Because remember, other than your factory, there's also the administrative block where the admin takes place, and there's also the sales and distribution area. So that is a SEP that does not form part of the production cost statement. Does not form part of calculating the cost of production. Okay, so depreciation will only be on factory-related items. So let's move on. Okay, there's factory maintenance, also only the factory maintenance. Okay, there's electricity and water. This is in the example. To the factory only. There's factory rent. Okay, and there's insurance to the factory only. If insurance is to the office block, then you would not consider it here. So write this down on your answer sheet, and we're going to complete this. We're going to go through the question. And let's see. I will put this up again, so if you didn't copy down everything, then you will be able to copy it down later. So let's go through the example. Remember, we've done our direct portion. So now it is only the indirect portion. So let's go over what we need. I'm going to read through everything and underline what needs to be done and do the calculations on here, and then we'll copy it over. Okay, so it says depreciation is as follows. On factory plant, another word for plant is factory machines. Okay, so another word for plant is machines. So factory machines, 7,400. Office equipment. So we don't put in the office equipment because it's not factory related, but we put in the factory machine. So we're only going to put in 7,400 opposite depreciation. Okay, so it's only the 7,400, not the office. Then they say factory maintenance, the fact that they use the word factory maintenance is paid in July, and it was 8,000. A further 3,500 is owed on the repairs to a machine. So what we're going to do is we're going to put in 8,000 and 3,500. Why are we going to do that, learners? Because we are busy with financial statements. And remember, that will be an accrued expense. Did we get the benefit of the maintenance? Did we use the benefit of the maintenance? Yes. Did we pay it? No. Is it an expense for this year? Yes. So we are going to put it in the books. So we're going to put in both. Okay? Water and electricity. Please tell me if I'm going too fast so that I can slow down, because I really want everyone to get this. Water and electricity paid was 4,600. The administration office uses 10% of this, and the factory uses the rest. So we are going to take out the 10%, and we're only going to consider the 90% for the factory. So we're only going to take 9/10 or 90% of the 4,600, and we're going to exclude the 10% because we don't want to put the admin office stuff in. Okay, we'll calculate that in a minute. So for your calculation, only 9/10 of your water and electricity. Let's put down the amount. Coincidentally, it's going to be 4,140, and we'll transfer that later on. Okay, and we'll transfer those two later on as well. Right, we're moving on. Rent and insurance are allocated between the factory and the admin office on the basis of floor area. Okay, we only want the factory. Now they say the factory comprises 630 square meters, while the office comprises 270 square meters. Now we are working with a ratio. Okay, so let's just do that quickly. Let me do it on here. Take that one off there. Right, so we're first going to look at the rent. That's a bit too big. Let's look at the rent there. Okay, and insurance here. So they say that the entire premises monthly rental is 30,000 for the entire premises and 43,200 for insurance. And we're going to use a ratio. So the factory is 630 square meters and the office is 270 square meters. So now, what is the total square meterage? We're going to add the two together. So now we take, to work out the total square meterage, okay, we take 630 plus the 270. Okay, let me just put on my calculator here. 630 plus the 270, and we get 900. So the total square meterage is 900. So we're going to times that by 630 over 900 to get the factory portion, and we're going to times that by 630 over 900 because the full portion is 900 square meters. Okay, and that is how we're going to work out our rent and our insurance. So let's just get the amount quickly. Rent is 21,000. We can obviously simplify that, but it's not necessary. So in your calculator, you say 30,000 times 630 over 900. If you simplify it, 30,000 times 63 over 90, and you're going to get 21,000. In your calculator, you take 43,200 times 630 over 900, and you're going to get, for insurance, you're going to get, oops, did I take a wrong amount here? Monthly rent, that, and the annual insurance. Okay, so let's just work it out. Divide by 12. Okay, so we take 43,200 annual insurance, 200 times 630 divide by 900. Okay, you're going to get 30,240 per annum. You're going to divide that by 12 to get a monthly rent of 2,520. So that is what we're going to put in our production cost statement, and that is what we're going to put in our production cost statement. This is insurance per annum, and that is monthly. So don't be like me and not read properly. Read it properly, and you divide by 12 because I want 1 month's worth of insurance for the month. Okay, so there we've got that. So let's move on. Got that there. Let me just get my pages organized. Not lose any pages. Activity. There we go. Activity 6, G. So by G now. Indirect materials. Okay, on page 14. Indirect materials bought for cash, 20,000. There was no stock of indirect materials at the end of the month. Okay, so we also didn't start out with indirect materials. Let's just check. Did we start out with any indirect materials? Nope, we didn't start out with any indirect materials, and we didn't end up with any indirect materials. Okay, remember, you must always refer to your stock accounts. Whenever you refer to a stock, it's always opening stock plus purchases minus closing stock. In this case, there's no opening stock, there's no closing stock, so it's just the purchases. So let's look at this here. Okay, 20,000. There was no stock of materials at the end of the month. The factory uses 75% of these materials while the office uses the rest. So all we do is we're going to take times 75%. Okay, and that's going to give us 15. Let me just see indirect materials. 75%. Let me just check out 15,000. It should give us 20,000. So let me just calculate that quickly. 20,000 times 75%, 15,000. Okay, so that should go in there. This we've worked out already. We don't need it for, because that is our direct labor anyway. Other salaries. Let's just talk about that quickly. Other salaries. The factory cleaner earns 2,600 per month, so we're going to put that in. The factory foreman earns 15,000 Rand per month. Okay, he earns 15,000 Rand per month, but there's another note. The bookkeeper had forgotten to process the foreman's pension. The employee's pension deduction is 7%, while the employer's contribution is 10%. Learners, we only consider the employer's contribution because we're looking at the expense to the factory. Okay, we're not looking at the expense to the person, to the worker, but to the factory. This is what the cleaner earns, and we're going to put in the 2,600 by the wages, and the 15,000, we're going to consider the 15,000 as his basic salary plus another cost to company of 1,500. So his total earnings will be 16,500. Okay, just see if there's any questions further. I'm going to answer that question in a minute. There's quite a lengthy question which I'll answer in a minute. Okay, so that's 16,500 there, only the employer's contribution. We don't consider the admin staff at all. They do not form part of the factory. Okay, so let me answer the question quickly. It says, how do we determine the work in progress if not given? And it says, and how do we determine the work in progress at the end of the year if it is not provided? So let's see. Here they give you the work in progress. Okay, they say at the beginning of the month, there you had 55,000 Rands worth of work in progress, unfinished tables, and at the end of the month, you had 40,000 Rands worth of work in progress. So you won't have to determine it, learners. In most cases, in fact, it will always be given to you. They'll always give you the opening balance for work in progress and the closing balance. And I'm hoping you're doing that because you want to work ahead. Another question here is, why don't we multiply the 10%? It is, I'm trying to see which question is that. Is it this question here? We don't need the 10% for the production cost statement. Okay? All we need is the 90% for the production cost statement. The other 10%, they said here, admin uses 10% and the factory uses the rest. So we don't want the 10%. We don't need to calculate it. Okay, we're only calculating what is relevant. Okay, so learners, that there is your calculation. So all we're going to do now is we're going to copy it over onto our production cost statement and we're going to complete it, and then we're going to move on further to complete our production cost statement. So indirect materials. Okay, I've got it as 15,000. Okay, wages, I've got here as 2,600. As per my calculation, the cleaner earns 2,600. Salaries, the foreman, remember it was the 15,000 plus the 15,000 plus the 1,500. That gives you 16,500. The depreciation, we're only going to use the 7,400 for the factory plant, for the factory equipment. That's all we're going to need. Okay. Someone, Sibolalo, asked me, where did I get the 1,500? Sibolalo, I will answer you in a minute where I got this amount from. Okay, I'll go back to that. Factory maintenance. Let's just look at that one. The factory maintenance was 11,500. Okay, water and electricity. We worked out to 4140. 4140. And factory rent, remember, we worked out to 21,000. And then insurance, we worked out to 2,520. That is when we worked out our ratio, our proportion. So all we have to do is add this up. Okay, let's add this up. 15,000, 2,600, 16,500. If someone can add it up for me, it'll be lovely. 7,400, 11,500, 4140, 21,000 and 2,520. Okay, I got 80,660. Can we add it again? Because I got other answers here. Let me add it again. 15,000 plus 2,600 plus 16,500, 7,400, 11,500, 4,140, 21,000, 2,520. I think my calculator, there's something wrong with this calculator. Yep. Okay, so this is the amount at the bottom. I'm sorry, I'll have to calculate it again because I'm getting funny answers here, so there'll be a bit of quiet on my side. Yeah, 80,660. That's what I got twice, and no one else is getting that answer. Oh no, quite a few people are getting it. Thank you. 80,660. So let me explain to you this. We're going to put all the way up there. Okay, moving it all the way up there. 80,660. Moving it up there. So now we're going to add that to that. So we're going to plus 271,640, 352,300. Okay, and remember, someone asked me about the work in progress. I get it from my question paper. So my opening balance for work in progress is 55,000, which I'm going to add and put the answer. So I'm going to add that together and put it there. So I'm going to add another 55,000, and I'll explain to you where all of this comes from. 407,300, and I'm going to minus 40,000. That is my unfinished goods minus 40,000, and that gives me 367,300. That is my total cost of production of finished goods. I finished that. Okay, now that is not my cost of sales. That is just my finished goods. Because I could also have finished goods opening balance and finished goods closing balance. Okay, so that is my finished goods there. So I just want to actually go through these balances here with you. Okay, let me just go through these balances and explain these balances with you. That there is my opening direct materials. So if I think of June, in June I had raw materials that I hadn't used. It's still in my raw materials storeroom. I hadn't used that. Then I bought another 180,000 rands worth of raw materials, and I didn't use 65,000 by the end of the month. So I used, like I said, 155,000 rands worth of raw materials. Work in progress is my unfinished goods. Another word for work in progress is my unfinished tables. The tables that was on my production floor in June, but I didn't get to finish it by the end of June. Then I made some more items. Okay, I made some more items, and so some items on the factory floor, and there was unfinished good or work in progress unfinished goods at the end. So by the end of July there was 40,000 rands worth of unfinished goods. Okay, I didn't start out the month with finished goods, and I didn't end up the month with finished goods, which means that everything that I made in that month I sold. I didn't start out the month with direct materials, and I didn't end up the month with indirect materials. So learners, our time is actually up, and I really wanted to have explained some more to you. But the production cost statement is one of those statements that they always ask. I really hope that you got the gist of it, that you got the terminology, because the terminology is very important. And what they can throw in there is working with percentages and working with ratios. Please go over this example again, because this is a very important example. What you also need to go over, learners, is the break-even. Okay, it's working with break-even, and also your unit costs, working with your unit cost. So they could ask, what is your direct material cost per unit? What is your direct labor cost per unit? In that way, you're going to take your total cost of production and you're going to divide it by the number of units that you had produced. I wish you all the luck for your final exam, and I really, really hope that you work very, very hard to get a good mark in accounting. For those of you who have attended every single telematics session, I would like to wish you well done, and I want you to go over the work again, especially the work from the first term. You know, the new work that's in the syllabus, like the buyback of shares and the inventory section, and even this section. The curriculum advisors would not have put this work in the telematics book if it wasn't important. So use this book productively and go over it and practice it over and over again. And I wish you very well for your mock exams, which are in the next few weeks, and for your final exams at the end of the year. Thank you so much for listening to me. Thank you very much. Bye-bye.